In our previous video, we described how the investments department meets the requirements of Wesleyan's sustainable investment policy. In this video, we'll be discussing how we use sustainability-linked factors to find companies we think will outperform their peers and improve the returns of our funds. We believe material sustainability factors should always be considered when investing. Why would you ignore the risks of regulatory fines, higher compliance staffing costs, or a carbon tax? Or the benefits stemming from the increasing demand for aviation fuel, transition metals, or recycled plastics? Our sustainable investment team doesn't just want to find investor companies that are making a positive contribution to the world, but those that will also generate higher returns for our customers. In the rest of this video, we'll be talking about some of the companies we feel will achieve both. We have invited along our Director of Investments, Martin Lawrence, to ask some questions on what can seem like two very conflicting subjects. Questions that we feel our customers will want to know the answers to.
Lara, what sustainability-linked investment trends are you seeing at the moment?
One of the major sustainability-linked trends that I've been looking at recently is the projected growth in electricity demand. This is being driven by a rise in renewable energy, but also by a rise in AI demand. There are industrial companies which are set to benefit from the electrification of processes, such as the transition from gas heating within buildings to electrical heating, but a lot of these are already looking very expensive. One area where I do see more value, however, is within the technology hardware space.
And are there any specific companies that you found in your research that fit this sustainability-linked trend?
Yeah, so one company I've looked further into is a company which produces power semiconductors, which improve overall energy use within their end products. So by improving energy use, they reduce the electricity demand, they lower the total emissions and lower costs. I believe this company is set to experience massive growth, which the market is underappreciating. As a summary, I produced an investment research report recommending that we buy shares in the company, and since then, it's now held in multiple funds.
Max, in your research, have you come across any companies that you would consider sustainable but wouldn't necessarily make a good investment?
Yeah, so as Laura mentioned, for some of her sectors, often companies exposed to these positive or trending themes can be overly expensive. So one particular example I've covered in recent years is a European biofuels producer. So we're quite positive on the outlook for demand for that company. It should be fueled by corporate decarbonisation and government regulation on emissions. The issue with that particular company is investor expectations for the prices they'll be able to charge for those biofuels is just far too optimistic. So whilst I've got a positive view on the sustainability of the company, I actually recommended that fund managers didn't buy it because the shares were just too expensive.
And what's happened since you performed that initial research?
So the company actually reported some poor results. So the share price has declined, mainly due to investors readjusting their expectations of future biofuel prices. So eventually it reached a price where we felt the risk-reward balance was in our favour, and so we purchased shares in the company.
Water quality seems to be a major concern at the moment. Is there a way of investing in companies who are addressing this issue?
So over the last couple of years, we've been engaging in water utility companies, regulators and industry experts on water pollution and leakage rates in the UK. The meetings that we've had with these companies have taught us about some of the challenges which they're facing, but also the considerable investment that's going to be required to fix some of the issues.
What else have you learned?
It also became evident that concerns around water scarcity and safety were large global issues, and this prompted me to look into some of the companies that will be supplying the required infrastructure for some of these improvements.
Have you recommended that our fund managers invest in any of these companies?
Yes, so one of these companies is a global water technology company which makes products to improve water efficiency but also purity. This includes filtration devices and also smart meters. The UK regulators made it clear that smart meters are going to be expected in the coming years, and in the US, water purity is a massive issue with increasing regulation around what is considered safe levels of forever chemicals in water. As a result of this research, I have recommended that fund managers buy shares in this company.
Is it always obvious when you first do your research whether a company is sustainable or not?
Yeah, I mean, sometimes it's obvious, sometimes it's not quite so clear. So, for example, one company I've researched previously, it's a UK engineering firm which sells actuators, which essentially control the flow of liquids and gases through pipelines. So, their main end market is the oil and gas industry. So, from an initial perspective, they don't appear particularly environmentally friendly, but their products actually reduce methane emissions from pipelines. So that's methane is one of the largest contributors to global warming. So with government action on reducing these emissions, we've seen companies like Chevron, Total, Shell put in place measures to reduce their methane emissions. So demand for those actuators should be supported in the future. The company also serves the hydrogen, biofuel, water transportation industries, all of which are areas we feel there'll be many years of positive growth and investment. So I've got a positive view on the company from an investment case and also from a sustainability angle.
I hope you've made clear sustainable companies can come in many different guises. And at Wesleyan, we won't just invest in a company because they have a positive environmental or social impact, but we are looking for those companies that are both sustainable and have good long-term growth prospects. You can find out more about Wesleyan's sustainable investing approach at wesleyan.co.uk/intermediaries.